So welcome everybody. This is our February 2025 webinar. We're talking tax tips, last minute tax tips before you file your return, as well as an equally important topic of understanding your tax return when you actually get it to look at, right, Drew?
Yeah, look forward to see what you have here, Leo.
Yep.
Not that I don't already know, but forward to see how you do this.
All right. So what we want to do with the webinar is kind of take you through a tax return. We've got kind of a sample return here with some information just to kind of point out some of the big things that we want, you want you to keep in mind as you're reviewing the return. So, we're going to start with page one of the 1040, which is obviously your tax return. And some of the key stuff to look at kind of on the first half of the return is you want to make sure, one, your personal information is correct. You want to make sure your name is spelled right, your social security number is accurate, your spouse's social security number is accurate, your address is accurate. Um, if you are over the age of 65, you want to look at these boxes down here and confirm that these are checked off. Want to make sure that you get that additional deduction if you are 65 or if you're blind. You want to make sure those boxes are checked off as well. And you also want to confirm which dependents are on your return because there might be some years that things change. Maybe you've got a child that was listed last year that shouldn't be listed this year or vice versa. I want to make sure that, all the dependents that should be on the return are actually listed there in some way, shape, or form.
This is the typical thing that some reason or another, if people aren't looking at this and we make a mistake, uh, for whatever reason, it's an easy thing to catch, and they should look at this before they say, "Okay, go ahead and file my tax return."
Yep. Yep.
All right, what else?
All right. So now we get down to a bit of the nitty gritty. So kind of the summary of your income for the year. So what you really want to do kind of with this section of the return is you want to look really these boxes here, kind of 1 through 6, and just look at the numbers and make sure that from your perspective, they make sense. If you've got a job and you made, $200,000 last year, but this number up here only shows $100,000, well, something might be a little off there, and maybe some income got missed or something like that. So definitely want to kind of just based on your memory, make sure that some of the numbers that are in here line up with kind of your understanding of things. There's a couple of, other important pieces. One big one you want to really check for is if you've made qualified charitable distributions throughout the year. So that's when you've taken money out of your IRA and sent it to a charity. You want to make sure that that number is properly reflected on the return. So you'll see for line 4 here, we've got IRA distributions with an amount, and then there's a taxable amount over here, and it says QCD next to it. So you just want to confirm that the difference between this 22,000 over here and this $10,000 taxable amount is actually the amount that you gave in QCDs last year. Because, as Drew knows well, the custodians, most of them, don't like to report that QCD number on the 1099s when they give it to you. It's kind of up to your preparer to make sure that that information is accurate.
Yeah, that's a terrible mistake if it's made, and it can be easily overlooked. And there's another one that Leo, it's called the public safety officer. You work for fire department or police officers, FBI, park ranger, correction facility. That'd be on line 5. You get $3,000 less. So instead of saying 12,753, it would say 9,753, and over on 5B it would say, 9,753 minus the 3,000 and a little symbol PSO, public safety officer. These are easy things to catch if the preparer didn't do it right.
Yep, exactly.
Next up.
Yeah. And then kind of page 2. So page 1 of the 1040 really is the income information. Page 2 is where the tax number is calculated and your payments show up. So obviously it'll give you a number of the total tax that you owe for the year. But what you really want to check is the withholding information and the estimated tax payment information. So you want to make sure that the amount that you had withheld from your W-2 shows up on this line here. If you had wages withheld, you want to make sure that shows up there. If you did an IRA distribution, you did some withholding on that, that's going to show up on line B here. But just want to make sure that, again, to the best of your knowledge, or even if you have the W-2 in front of you, just making sure that those withholding amounts are properly on the return. And in addition, go
You
ahead,
see
Drew.
this says see statement 7, see statement 8.
Mhm.
You just click to the statement and look at it and say, yeah, that's what I told them. Those were my estimated tax payments, and those were the days that I gave them. And yeah, those were the withholdings that came out of my IRA or my 401k or my salary or whatever. These are easy things to review.
Yep, exactly. And an equally important thing among all this is confirming the bank you've got listed. If you're getting a nice check from Uncle Sam, you want to make sure that it's going to the right bank account. Because there's nothing worse than your money going to the wrong spot.
Right? And
Uh,
then the identity pin, that's
yep,
important now too. That's
yep,
not right. It ain't going. Your tax return's not going through, right?
yep, exactly.
So where's that go? That's down there on the sign here, right? There you
Yep,
go.
yep.
So
So if you have a PIN number and it's not in one of those boxes, you're gonna have a problem when we go to get you your file your return.
that is true.
Yep.
What's next?
All right. So next, going down the return, we've got Schedule 1. So these are where kind of additional income shows up on the returns. This is where it kind of breaks out income that's not necessarily from a W-2 or a pension or Social Security or things like that. So when you're looking at this part of the return, you kind of really want to ask yourself three big questions. Did you have a small business? If you did, you want to look on line 3 here for that business income or loss. That's where that number will be. Did you have any rental real estate? Were you part of an S corp or a partnership? That number is going to flow through to line 5 here. Did you have gambling winnings last year? That's a pretty new one. But if you've got gambling winnings, you want to make sure that number is on this Schedule 1 as well. Because if not, the IRS will definitely find out about it if you got a W-2G.
This is all part of that postcard tax return that we were promised we were going to have numerous years ago. This is the postcard. It's a little longer postcard than we expected, but it still is the postcard tax return.
Uh-huh.
Anyway, what's next?
All right. So then kind of looking just at some more adjustments to your income. Lines 15 through 17, those are really important if you are self-employed. So line 15 is if you're self-employed, you've got that self-employment tax, so the Social Security and the Medicare tax. Obviously, if you're self-employed, you're paying the employee and the employer portion, but you get to deduct a portion of that from your tax return. So if you are self-employed, you want to make sure there's a number in line 15 here. If you are self-employed and you've got health insurance, there'll be a number in line 17, or there should be a number in line 17. If you're
Not
making a con
100% of the time, but
yeah,
typically it should be. The only exception would be you're self-employed and your spouse is carrying your medical insurance through their employer. That would be like the only exception to something that, but if you're on Medicare, it should definitely, something's got to be there, and so forth. So yeah, that's a very important one, Leo. And
yep,
line 16 is pension plans for the self-employed person. That's another important one that you can take advantage of pension plans. Not always a number going to be in there, but if you do have a pension plan, you should be asking why is there no number here, and so forth.
right, exactly. And this is another spot that, if you're looking for kind of last minute tax saving opportunities, two big ones are in, HSA contributions. If you haven't maxed out your HSA contributions, those are line 13 here. But, if you haven't maxed out those contributions, this is a place that you've got until you file your return to make those an additional contribution.
You didn't get that big one on line 11.
Oh, I did not get that big one.
There's a big one there. That's if you're a teacher and you spent money on your classroom or your students and so forth, you get $300, Leo.
That's
$300.
that's
Remember that. Don't miss that, man. You know, really hurt yourself if you miss that. But what the heck, you know, it's typically about $100 savings to the average person.
right.
So I'll take it, you know,
Exactly. More money in your pocket, less in Uncle Sam's.
right?
Um, yeah, and then the other one, in addition to that, is if you're kind of over an income threshold and you're debating making a traditional IRA contribution, that would show up on line 20 here. Now, obviously, we're big proponents of Roth, but Drew, you've seen it many times. There's plenty of times that you kind of are right over, some tax landmine or threshold that making a traditional IRA contribution can really, really save you a couple bucks.
Yeah, now there are limitations on when you can do that and how you can do it and whether you can do it or your spouse can do it. You really got to nail that down. But I have seen, Leo, where a client put in $2,000 and got $2,100 in tax savings.
Yep.
That's
It's
that's almost unfathomable. You know, that's 105% tax savings on their IRA contribution because, like you say, they went over a little tax landmine. It pushed the taxes up that much that by doing that deduction, going right down below it just a little, boom, you got all that tax savings. So,
yep.
anyway, good point.
All
Let's
right.
go on to the next one.
Yeah, so this is kind of just following up on the HSA contributions. So this is Form 8889. There's no quiz at the end, so you don't have to memorize the form number, but
There's not?
there's not. I know. I usually like my trivia questions, Drew. Um,
That's true.
this is so if you are trying to figure out how much you can put in your HSA, this is the portion of the return that actually shows you. So it'll add up to Drew's point. If you're on a family plan or a single plan, it'll put in how much you've put in through your paycheck and how much your employers contributed to your HSA, and then it'll show you how much you can then contribute to then get an HSA deduction on your return.
And the way this one here is set up, Leo, this is a tricky one because this is the catch-up contribution for a spouse that isn't the one holding the medical plan, but they're over the age of 55. That's the way this is set up. And what you're seeing here is that that spouse over 55, not the one with the medical plan, that they're able to still do $1,000 themselves. Now this form gets a little tricky, but if we're doing the return, hopefully this is caught and you get that advantage. But yeah, that's exactly what this does. And if it was the one who had the plan, Leo, and they were putting in, let's say, $7,750, and they only put in $6,750, it would say to them, hey, you could still do $1,000. That would be line 12. If there's a number on line 12 and you haven't, you can contribute that extra amount. Now, I think this one here, the way these numbers are flowing isn't flowing 100% properly because I doubt seriously they could do 48.75 more. Maybe they could, or 38.75 more.
Right.
But nonetheless, we probably talked to the client and said, you should do this if they could. It
Exactly.
gets complicated. I'm not getting into all the details of that one. So let's go on to the next one.
We can make a 3-hour webinar for all the details there.
That's true.
So the next one, this is Schedule 2. So these are just some extra taxes. If you are on the
We don't
Affordable
want to
Care Act,
talk about extra taxes.
I know, I know.
We want to talk about the one where you pay less taxes, Leo.
That's later on. We're getting there. But if let's say you're on, the Affordable Care Act and you're getting the premium tax credit. Part one is you want to check that. You want to look and see if there's a number in there. Because that means that they gave you too much of that credit and you might owe them a little bit back. So you want
You
to
told them that your income was going to be 25,000. It turned out to be 45,000. Now the government's going to say, give us some of that money back. That's what's happening there.
Yep. And same thing, if you got a small business, you're self-employed, line 4 will show you that self-employment tax, that number there. Um, and
But
then
line 8,
yeah, line
the
eight's a big one.
yeah, that's the when you make a mistake on a retirement plan, there's going to be a penalty in there. Let me tell you something. 90 some percent of the time, if there's a penalty on line 8, it's probably wrong. That's the point.
Hmm.
If there's a penalty there, it's probably wrong, and you need to figure out why is it there, and is it actually one of those 10% of the times when it's right? Because there are some times when it's actually right. But I can't tell you how many times I've reviewed tax returns for clients and they penalize themselves on line 8 in Schedule 2, and I go back and review it and say, no, wait a minute, you did this wrong. You made a mistake here, and you shouldn't be paying this penalty. So anyway, that's a good point.
Yep. All right.
Let's go. Where are we going? Oh, here comes the credits.
Uh-huh. So these are credits. So there's a couple of big ones on here, but the first one is the foreign tax credit. So you've got a brokerage account and you've got a fund and they withheld some taxes through the fund, to a foreign country. You'll get a little bit of credit for some of that on line 1 there. A lot of the returns we do have a credit up there in line 1. Not always, but good place to look. Line 2, if you have kids and you've got childcare expenses for them, that's where that child tax credit will show up in line 2. So if you've got kids, you want to look in line 2 and make sure that there's a number in there. Or if there's not, just kind of ask yourself why not, or ask the preparer why not.
Well, there's two things there. Okay, so number one, if you're using a dependent care expense at work and you only have one child, there should not be anything in line 2. But if you're using a $5,000 dependent care expense at work and you have two children, then there should be a small number in line 2. It should be like $200. Or if you have no dependent care expense at work, then you should see a big number in line 2, depending on whether you have one child or two children.
Yep.
We're just going to leave it at that.
It's as clear as mud.
Yeah, well, like you say, we'd be on a 5-hour seminar if we did every nuance of all this. But here's the cool thing, Leo. You see that $1 there in foreign tax credit? $1.
Yep.
You think, what are you putting $1 in there for? Well, $1 tax credit is $1 less tax because credits are dollar for dollar. They're not a deduction. There's a difference between a deduction and a credit. If that said $1,000 and my tax was $10,000, the credit brings it down to $9,000. If my tax is $10,001 and there's a 1 in there, my tax is $10,000. I'm taking those $1 every time.
Yep. That's again $1 less to Uncle Sam. That's what we're looking for.
Absolutely. And these are only federal tax credits. There's similar things on state tax returns, but we're not even doing the state return today. We're sticking strictly with the Fed right now.
Yep.
All right.
And you want to talk about another big one, dollar for dollar, line 3. If you've got kids that are in college,
Well,
you want to look and see if there's a number in line 3. That's where that American Opportunity Credit's going to flow in, or the lifetime learning credit if you're taking advantage of that.
but the problem being that your income has to be below 180,000 for something to be in there, and it has to be under 160,000 to get the whole thing. So again, this gets back to what you and I talked about earlier, that if your income's over one of these thresholds and you can do something to pop it just down below it, bam, you get the whole credit, not just a portion of it, etc. So, but that's very important. But your income's got to be low to do that. This is also, Leo, where you get your credit, like if you buy a Tesla or an electric vehicle, this is where you're going to get that big credit here. but there are limitations to that too, based on your income and so forth and so forth.
Yep. As you can tell, our favorite answer is it always depends.
It depends.
Yep. All right. Just a couple more things on Schedule 3. This is in a different piece of it. But again, if you're on the Affordable Care Act, you want to review line 9 because as Drew noted earlier, if you tell them your income's 20,000, but it's actually 40,000, you may end up owing them back some of the premium that they gave to you. However, let's say it's flip-flopped. Let's say you told them your income was 40,000 and you only made 25,000. Well, they may say, well, wait a minute, we owe you more of that credit back. So that's going to show up on line 9 there. Uh,
Absolutely.
and the other big one is line 11. So if you've got two jobs and you've got Social Security taxes being pulled from two paychecks, you want to you want to look on line 11 there because once you go over that Social Security threshold of what's it now, Drew, like 170,000 or so, roughly.
Yeah, it's about 175,000 this year, right?
Yeah.
We just had somebody where the company was bought in the middle of the year, and so they worked for company A, and then the company was bought in the middle of the year, and company B took over. And when they did, it was if they were employed by a whole new company. So they withheld Social Security tax to the max in the first company. He shouldn't have owed any additional Social Security tax in the second company, but the second company isn't able, they are not allowed to say, well, wait a minute, they have to withhold it. That's the way the law works. And the employee has to wait until they file their tax return, and then the government will allow you to have it back. That's the way that works. So if you worked for two companies and your income was over 170,000 with at least one of them, chances are you paid too much into Social Security and line 11 is going to have a big number in it. And again, it's dollar for dollar refund of money.
Yep. Yep.
All
All right.
right.
This next one. This is a big one. So this is Schedule A. So if you are itemizing your deductions on your tax return, you'll likely see Schedule A in the return. And if you don't see it, it's always worth asking, well, you may be asking yourself, why didn't I itemize this year? So just a reminder, so Schedule A is made up of really a couple different things. First, you've got any medical expenses you've had for the year that are over 7.5% of your income. So if you've got pretty high medical bills in a year and your income is relatively low, there could be a number on line 4 there, that medical expense piece of it. Then you've got your state and local taxes. So that's the taxes that you've paid to the state you're living in. That includes your property taxes. Now, keep in mind, those right now are limited to $10,000. So if you paid 15,000 in state and local taxes last year, but you're only going to have a number of $10,000 on line 7 here. Then you've got your mortgage interest. That's in this section here, but you want to look there. If you've got mortgage interest, make sure that the number in there matches the 1098 that you got from the mortgage company. Then the big one, kind of the most talked about one is the charitable contributions. So if you're making cash gifts to charities or non-cash gifts, but if you're making contributions to charity, they're going to show up down here in box 14. And then when you add all these up, what you want to look at is what is the total of these itemized deductions. So in this case, this sample case, we add them up, it's about $12,750 of itemized deductions. Well, if you look over here, we've got the standard deduction amounts for your 2024 tax return. And if you look at all these numbers, well, if you're single and under 65 or over 65, these standard deduction amounts are higher than your itemized deductions, which is 12,750. So that's a case where you'd likely take the standard deduction. Now there's always complications to that. There's times that, as Drew well knows, or Drew's seen many times, you might actually want to take a lower itemized deduction to help you on your state return. But basically, you just want to add up these numbers and see how close are they to the standard deduction that you would be taking if you took that route.
Yeah, I mean, there are times where being itemized is a benefit, but normally most people are going to take the standard deduction now because it's so high and you're limited to what you can actually take as an itemized deduction. One of the things President Trump has said he wants to do is raise the state and local income tax deduction. And if he did that, more people would start itemizing again. So we'll see. But yeah, this is a very important form to look at and know why did you itemize or why didn't you itemize, and did you get all my itemized deductions? There's another good one. Did you get them all? And understand why. So what's up? What's next?
Yep. Next, Schedule B. So this is just where you'll find any interest that you've had through the year. So bank interest. If you've got interest in a brokerage account, that'll show up here. That's in part one of the Schedule B. This is a good place to look every year just to see how many bank accounts you've got floating around. If you go to part one here and you've got 20 different lines here, that may be a time to say, hey, wait a minute, maybe I ought to smush these down to one or two accounts or something. But that's something to look at on part one. And then part two is if you've got a brokerage account, that's where you'll find the dividend amounts that you've received for the year in part two down there. So you got a Vanguard account, Schwab, Fidelity, any of those, you're going to find those dividend numbers in part two.
Right. And then you see that our really cool online savings Flourish is where that's going to be reported. And if you're not familiar with Flourish, you need to become familiar with Flourish. Talk to your advisor at the consulate. You can only get to Flourish through a firm like ours, but talk to the advisor. We take no fees on it. We don't service it, but we're going to get you 4% on your money and up to $5 to $10 million of FDIC insurance. That's a great deal, Leo.
Hey,
You know,
can't pass that up.
you
Shouldn't
can't
pass
pass
that
that.
up, let's say.
Let's go to the next one.
Yep. Next one's a fun one. This is Schedule C. So once again, for anyone who's self-employed or has a small business, you really want to look at your Schedule C here. So the Schedule C is going to show you what your gross revenue was. So the sales that you made or whatever you're doing, that's going to show you the income that you had from your small business. But the other thing you want to look at is part two, which are the expenses that you had related to your business. So, if we look here, we've got some travel expenses. A big one is if you've got someone professionally preparing your return, like us or another paid preparer. There's a little portion of your tax prep fee that you can deduct as an expense against your small business income. And then kind of going down a little further, another biggie is the home office deduction. So if you've got an area of the house that you're using solely for running this business, you want to look on line 30 to see if there's a number there. Because if there's not, there very well should be. So you want to look and see if there's a number in there. And then at the end, line 31, after kind of taking all this up, it'll say it's going to show you after you take off all your expenses, what is your net taxable profit from your small business for the year. So you want to take a look at that number just to see what that number shows. All right. The next one is Schedule D. So Schedule D has a couple different parts, but part one, which is the top part of the form, is going to show you any short-term gains and losses that you've had for the year. Now, this is a summary, so it's not going to show you each one. It's going to take a summary of the sales versus the basis and tell you if you had a net short-term gain or loss for the year. And then the bottom portion of Schedule D is going to do the same thing, but for your long-term capital gains or losses for the year. So you want to look at this number, and if you made a large sale of a stock this year, and there should be a pretty high long-term gain in there, you want to look at both parts of Schedule D to see if those numbers are actually flowing through there properly. And then for specific information, you want to look at Form 8949. So this is going to show you the specific transactions that are being summarized on Schedule D. So again, the top part, part one, is your short-term transactions for the year. And then part two is your long-term sales or gains and losses for the year. If you have an account at Schwab or Fidelity that we manage, we kind of lump all the short-term transactions together and summarize it. But if you've got stock held elsewhere, or you're using like a TurboTax or something like that, they usually tend to list out the specific shares, the date you purchased it, all that good stuff on Form 8949. So you definitely want to take a look at that form as you're reviewing the return.
Yep. Schedule D is pretty straightforward.
Yeah. This is a big one, Drew. Schedule E.
This
Um,
one's complicated.
yes. So page one of Schedule E is where you want to look if you've got rental income. And there's a couple of big things you want to confirm on here. One, you want to confirm the correct property information in Part 1A. So you want to make sure that the address is right. That's a big thing, pretty simple. You also want to make sure questions A and B at the top here are answered properly, because as Drew said many times, if they're not, it can cause you some tough times as you're filing the return.
Well, those two first boxes about 1099. That's for like you have a rental property and you hire Leo. Leo, come on over and do my kitchen. Your father actually does renovations, right? So you could
He
call
does.
Mr. Leo and say, Mr. Leo, come on over and do renovation on my house. And so Mr. Leo goes over and he does the renovation on their property. Now, he's not a business in the sense of an LLC. He's just Leo, and he does renovations. In that situation, you have to 1099 him to show that you paid Leo X dollars to do a renovation. And if you don't, and they catch you that you took a deduction for something that you were supposed to do at 1099, you lose the deduction, period. And now, if Leo comes over and says, hey, I'm Mr. Leo LLC or I'm Mr. Leo Incorporated and I'm going to do your work, now you don't have to give him a 1099. It's only if you hire an individual to come over to your house and do work that you have to issue a 1099. And when you do, and it happens often, Leo, landscaping companies, cleaning companies. Typically, these are not LLCs that you're hiring. You're hiring individuals, and those individuals have to be 1099 if you want to do the deduction. If you say no and they catch you, then they definitely take the deduction away. You know, so and then type of property. What type of property? That's an important one also. The answer that you state there is going to have a significant impact on how that property will be treated for tax purposes. I don't have time to go into each and every one of them, but that is probably one of the most important entries you'll make. And then it's going to feed over as to whether, fair rental days, personal use days, and all that kind of stuff is applicable. So just look down, see what your incomes are, see what your deductions are, make sure that you've done the top right, and then it's the best you can do. You got to trust the preparer to do all the technical things.
Yep. Yep.
All right, what's next?
And next is the part two, or the back page of Schedule E. So this is where you're going to look for if you've got income from a trust or a partnership or an S corp, anything that you really get a K1 for. That's where you want to look for this information. So in part two here, kind of up top, this is where you want to look for the partnership and S corp information. That's where that information is going to flow in. If you have income from a trust or an estate, those will show up down here in part three. Now, it's not going to give you the specific amounts that show up on your return from these K1s. Those will flow to some of the earlier forms we talked about. So if you've got income from a trust and you got a K1 for it, you've got interest, bank interest from a trust. Then back on Schedule B, it'll say, bank interest from so-and-so trust K1, and that's where that number will flow. But this is where you want to check if you know you had a K1 and you're expecting some sort of income from one of these entities, you want to make sure it shows up on page 2 of the Schedule E here.
Yep. Again, that's pretty straightforward. If you have a partnership, you get a K1, it should show up on that page.
Yep.
So I think that's pretty much the primary issues that somebody should think about looking at a tax return. Whether we do it or somebody else does it, these are the things you should be looking at. And if you have somebody else do it or you do it yourself, you should have us review the return because we review it for free. It's part of the services that we provide.
Yep. And nothing's worse than when we see a tax return, 6 months after the deadline, and we say, man, I wish we would have solved this before tax time. We could have done X, Y, or Z. And nothing makes us feel better when we can help clients save a little bit of money, right?
That is true. So, but if somebody is already a client of ours, just reach out to your primary advisor. And if you're interested in becoming a client, because what we're demonstrating is what a true professional advisor ought to do. Too often, too few people are getting this kind of comprehensive advice and the review. And as we showed, if you make a mistake on this, it's what I call an invisible loss, Leo. It's an invisible loss that you'll think you did a great return. But when somebody points it out to you, you realize it cost you $5,000, $10,000 because you didn't know. And we had one not too long ago. It was a $120,000 mistake. $120,000 mistake. Now, that's a real extreme one, but it's not uncommon to find $4, $5, $10,000 mistakes on returns. And this is just one of the many things that a true professional advisor should do for their clients. Not just invest money and invest it well, but providing all this comprehensive advice, especially the tax planning advice. So if you're, the financial physical, we do it at no obligation for somebody who has $1 million investment portfolio or greater. We do the financial physical at no obligation to demonstrate the differences to who we are and what you may be currently using. And then you decide. It's pretty straightforward. At the end of the physical, if we can't convince you that you need to be working with somebody who can help you from a comprehensive professional point of view, then fine. We won't charge anything. You go on your way, we go on our way. But we normally find that when people do financial physical, they say, why haven't I been getting this for the last 5, 10, 15, 20 years? And if I did, what could it have done for our finances? So that's the way to contact us. If you want to do a physical, you got $1 million portfolio or greater, we'd love to do the physical for you and demonstrate what we believe a true professional financial advisor should do.
Yep, exactly. All right. Well, we appreciate you listening. Hope everybody got a nice crash course in taxes today. If you want to know more, call Drew. He's always happy to talk taxes for much longer than the 30 minutes we spent today.
What about you?
Oh, you can call me too. You can call either of us.
All right, there you go. Thank you.
You got it.
Take care.
Yeah.